Hey traders, Nick Shaheen here, looking at some earnings from the financial institutions. Let's call them banks for now. So this is a bunch of companies that don't get the respect they deserve of late. At least that's what consensus is on Wall Street. Regardless of what I believe, they are cheap. Everybody says it, but they can't hold a rally. Everybody says it, therefore it's truth until it stops being the truth. Okay, so this is the XLF, kind of like a blanket statement on all of them. And you can see that the range has tightened quite a bit, all the way down to here, going into the start of their earnings report, which is, today is April 9th, and they start reporting this Friday. So in 3 days, we will start to get the reports for them. And three of them report, including Wells Fargo and JP Morgan, on Friday. And then next week, the rest will pour in. So they trade in unison. Whatever happens to the first couple is going to happen to all of them. So if I didn't want to pick a winner, I would throw a blanket trade based on my guess using the XLF. Sure, the upside or the downside, if I guess it right, my profits will be not as big because it's an indirect impact, but my losses won't be as big either if I get it wrong. The short-term reaction to the earnings is a completely binary event, so it is guesswork. All right, so they've had a good rally of late. So going into the event, it's kind of scary to be up 6 or 10% or whatever, depends on each of them. So it makes it harder to react with more exuberance from that. However, I think this week also starts them facing the politicians like Maxine Waters, and that's not going to be pretty. Now, she lost her puppet, her chew toy, so to speak. The Wells Fargo CEO resigned, and he was the target of her ire, and she's probably going to pick somebody else. I don't know who. So it's not going to be pretty. Maybe they fall more into the event. So it depends on when you like to deploy your plays on earnings. Here's what I don't do. I don't bet on Wells Fargo on for this week or next week, because if I get it wrong, and if I buy calls and Wells Fargo fails because of something they said, this is Wells Fargo daily, each candle is 1 day, then and the buy calls and it falls, then my calls are dead immediately. But if I buy calls in something that doesn't report until next week, like Goldman or some other bank, or maybe the XLF, then my calls will be less profitable the next day. They would be red, but they wouldn't be dead. There'll be something to salvage, because even though they move in unison, they're not going to collapse. The implied volatility inside the Wells Fargo puts or calls, the premium inside the options, will completely disappear, get slashed as soon as the event goes away for that particular stock. That's why I play indirect. So I would pick up the, this is my own compilation of the earnings for next week. So I see that Bank of America doesn't report until Tuesday of next week, the 26th. Citigroup, Goldman Sachs, same deal. Morgan Stanley, American Express. So instead of playing this week's reports, JP Morgan or Wells Fargo, I would play next week's reports, because if JP Morgan spikes, Goldman Sachs, Morgan Stanley are probably going to spike. If Wells Fargo falls, Bank of America will probably fall. So I like the idea of playing the transactors like American Express, Visa, and MasterCard, for example, and because these are kind of considered banks, but they're much better than banks because they're not hated, and they're not cheap, but they're not expensive, and they have technology and other stuff that they can rally on. So that might be the smarter play. Also, an even far more removed indirect play. So regardless of how I bet on the banks, the one message from here, I don't want to bet on the ones that report right now. I want to reach out and bet on the ones that report later, because the implied volatility completely disappears as soon as the event for Wells Fargo goes away this week. So if I go to buy calls or puts, and you look at the implied volatility from that options chain, you'll see it's a lot bigger than normal. And that disappears at the minute the stock opens. So unless you nail it right, the direction and the size of the move, you're going to lose on premium, even if you get the right direction. If it doesn't move fast enough or high enough or low enough, it depends on the bet. So what's my gut tells me? My gut tells me that these guys are still cheap, that what are they going to say that's going to tell us, yay, they have good news ahead? probably nothing. So I'm hesitant to bet up on the bunch. Okay, so technically, for example, Wells Fargo, if it loses this line, and it's not really a line, it's more like a rubber band zone, you see consolidation. This is aberration. That was the December correction where the whole market was completely hated. So this is more like a bottom zone area. So it's been support. But that's the thing with support. If it fails, then we may get a dip. So if it falls to here, I'll probably sell puts. But now we have like the CEO fluid situation, so maybe I want to choose something else. So what about Bank of America? So Bank of America looks like I did write up a long on Bank of America somewhere around here, actually, betting on this to happen. So if I did that, this is where I'd get out and say thank you for the money there, and we'll see what happens. So this is a consolidation zone that should be sticky. So in order to leave it, they need a lot more good news. And where is that good news going to come from? We have an inverting yield curve, at least it's trending that way, or not fixing itself. We have the threats of tariffs and all of that. So the whole malaise still is here. So they would have to come up with some great news, and I'm not sure where it would be. Eventually, if they break out of this, they'll have a lot more upside. You see my green lines, so I'm not like bearish because I like to be bearish on them, but they have to prove to me that they're going up. That's just Bank of America. Goldman Sachs, it used to be the golden child, but you can't trust the greens. Look at this. I mean, it targeted, it almost hit our target, but then immediately gave it up. So if I wanted to short something, maybe this guy, I'm not sure. You know, JP Morgan, they tell me it's the cream of the crop. They look identical. Look, I'm going to switch between the two. Those are two different stocks. So this is Goldman Sachs you're looking at. This is JP Morgan. What about Morgan Stanley? Almost identical. Okay, so this guy has a big white line. Let's see where that comes from. I just switched to a weekly chart. So 5 years. I'm going to switch to a monthly chart. So we're going back to 1999. And look at that. They're still exactly where they were 1999. I don't know what to say. Tight, big move coming. This is a monthly chart, so it's slow moving, big move, quote unquote. So the XLF, actually I should have done that for the XLF. Let's go to 1 month. So this is the XLF for umpteen years. It's in a cluster that had been a top. I'm not saying this is going to happen again. That's the 2008 financial debacle. So this tells me, big picture, there is support below, but you know, they have to tell a good story, and I'm not sure the banks can tell a good story this time around. Here's okay, easier said. If the banks are rallying, so are the markets. So why would I risk my money in the XLF? I'd buy calls in the SPY. In fact, I'd probably do it in something not the NASDAQ because they have no banks in them. So maybe the small caps, because they say the small caps, 20% of the small caps are banks. Or if I wanted to short banks, maybe I'll short the regional bank, which is even more hated than the regular XLF. This is the KRE. And you can tell it's got a potential upside here, technically speaking, but boy, that's pretty ugly that they do this and then erase it, and now they're failing right here. So maybe I short the KRE if I wanted to go along the XLF. But simply put, if the banks are rallying, the markets are rallying, so why not risk my money into something that I know is not going to have a binary thing on Friday, like going long or short Wells Fargo, because we really don't know what they're going to say, and more importantly, we really don't know how the market is going to react to it. I can tell you that technically this is pretty steep as far as a pretty tight situation. So you've got a floor just these few days, and look at this. So something has got to give here. Either bounce to resistance 1, maybe target 2, that's also resistance right here, or so these are the options on the financials, and play them accordingly. If you have any questions, let me know. Next signing out.